Let's talk about Bitcoin dropping below 40,000 and Ethereum under 3,000. Like we said in the title, Ethereum crashes. Ethereum crashes. Obviously not a terrible crash, but under 3,000 is significant. I think that we've seen this before. It's going to significantly affect our profits for the week, but it's not all bad news, and we'll talk about that next too. Bitcoin and Ethereum have dropped below 40,000 and 3,000 after dipping below 4% and 5% respectively in the last 24 hours. Currently priced at 38,962 and 2,904. The two largest cryptocurrencies by market cap have been in a recent slump. In the last week, both cryptocurrencies have fallen by almost 8%. The latest series of price drops can likely be attributed to the mining industry, which has experienced several developments that may have put pressure on prices. Now, this is important too, because we are in the mining industry. What are these things that they're talking about? Why are miners getting pressured, right? Miners are getting pressured from regulation across the board internationally, right? And even in the US, even in Texas, which is supposedly going to be the Bitcoin mining capital, there are registrations now with ERCOT for being a miner. And part of the problem is that that's delaying your expansion opportunities. That's delaying standing up facilities and such. And then on the GPU side, of course, the Ethereum merge keeps getting closer and closer, and they're kind of dipping off, maybe selling off some stuff or whatever. The pressure on the miners means that they have to sell to extend out while they wait on basically maybe their approval from ERCOT if they're building in Texas or whatever regulations they're facing. You know, New York is putting a ton of pressure on the farms up there. So to really extend out and you're having to wait, you're having to drop some of that Bitcoin that you've earned at lower than ideal prices for the mining, right? And that's kind of what's happening here. So the latest series of price drops can likely be attributed, to the mining. So Bitcoin mining. Last week, Bitcoin miners saw a drop in mining difficulty over 1% according to data from blockchain.com. Bitcoin mining difficulty, which tracks how difficult it is for a miner to mine a Bitcoin, has previously impacted the price of the flagship cryptocurrency. Back in July of 2021, and in the wake of China's crackdown on the crypto industry, Bitcoin mining difficulty dropped 28%. At the time, Bitcoin was priced at approximately 34,000 and was soon dipped below 30,000. According to Terran Times, Iran is also set to increase penalties for illegal crypto mining facilities using subsidized state electricity. Other market woes. Recent Bitcoin mining headlines are not the only factor in decreasing crypto prices. The broader crypto market has long been trending in the wrong direction. Last week, the crypto market fell by almost 10%, and the total crypto market cap fell to 1.84 trillion. Traditional stock markets have also struggled. At the start of last week, the S&P 500 was down almost 2%. The tech-focused NASDAQ lost over 2% of its value too. Previously, research has shown the crypto market, especially Bitcoin, to follow traditional equities. According to Arcane Research, Bitcoin's price correlated with the S&P last month more so than any time since October of 2020. What do we know? Once again, fundamentally, Bitcoin should not, in your own portfolio, be treated as a traditional equity. That being said, Ethereum, I would treat it as a traditional equity, but we don't see a decoupling between Bitcoin and the broader cryptocurrency market quite yet at this point, even though there have been hints of it over and over and over again. Bitcoin itself is supposed to be a hedge against inflation, a hedge against these things, but it's proving out to not be the case yet. I think a lot of that has to do with the public not understanding the actual functionality of Bitcoin and how it relates to things like the highest inflation we've seen, in like 40 years, was it, or something like that, at 8.5% last month. So it's kind of where we're sitting. But not all the news is bad, because we are seeing the public start to do the right thing. And that is taking their cryptocurrency and moving it out of public exchanges. Bitcoin's exchange balance hits a 3.5-year low. The latest move in crypto markets is context for April 18th. With each passing week, Bitcoin's blockchain metrics diverge from bearish macroeconomic factors, offering hope to long-term holders. The number of coins held on exchanges declined by over 20,000 Bitcoin to 2,449,785 Bitcoin last week, hitting the lowest since August of 2018. Now, this can be also indicative of the bear market too, if we're saying that 2018 is similar or the lowest points are similar. What are people doing? I think that if you take a look at this from my perspective, there are people just getting prepared to hodl their Bitcoin for a long time, right? For the long term. How does it affect it now with institutional investors coming in and so on? Well, it may affect it completely opposite than the way we saw it correlated in August of 2018. It may mean, of course, that we are starting to see, we'll start to see the prices rise as there's less availability within the exchanges. The tally has decreased by 138,266 or 5% this year, indicating hodling, a crypto slang for buy and hold, remains a preferred strategy in the market. Investors typically take direct custody of coins when intending to hold them for a long term. That's what we just said, right? A continued decline in Bitcoin available on exchanges means fewer coins available for sale and the potential for an extended rally. Or, in this case, an extended bear market that turns into a rally later on. Seeing that we're comparing these timelines, if we were to copy the exact timeline of August 2018, I don't know. It's just kind of what I'm seeing. Maybe I'm wrong. But I think obviously like your initial assumption would be this, right? What they just talked about. That would be the initial assumption. I'm just offering the counter to that. Quote, underneath the surface, there is a heavy phase of accumulation on chain, end quote, Blockware Solutions market intelligence newsletter published on Friday said. Quote, exchange outflows have reached a rate that only ever occurred 3 times before in Bitcoin's history, following March 2020, December 2020, a lot of which was likely GBTC, and September of 2021. As you can see, here's the Bitcoin balance exchanges since January of 18, kind of going up and up and up, and then kind of here, January 2022, and then kind of a little further on. It's kind of a small chart, hard to see it. Other metrics also paint a bullish picture. For instance, the percentage of Bitcoin inactive for the last year recently reached a record high of 63.7%. At the same time, Wales accumulated 1,000 Bitcoin last week, registering the first weekly uptick since January per Blockware Solutions. That is sounding bullish. Even so, Bitcoin fell to a 1-month low of 38,577 during the Asian hours, taking the year-to-date decline to over 15%. The selling pressure likely stemmed from tax issues and macro traders liquidating holdings, tracking a continued melt-up in government bond yields and Fed tightening scare. Clearly, macro factors are in the driver's seat. Quote, for now, we'll continue to listen to every soundbite from Fed officials as they look to combat inflation via scare tactics, end quote. ARCA's CIO Jeff Dorman noted last week. Whew, yeah, that is, look, man, inflation FUD's going to be a big deal. Quote, but 1 year from now, it's doubtful that the high correlation between rates, equities, and digital assets will be anything besides another footnoted relationship that didn't hold, end quote. Bitcoin and key support. Bitcoin's 3-day chart, where each candle represents price action for 3 days, shows the cryptocurrency is flirting with the 200-period simple moving average. Its critical level to watch out for, given bears have repeatedly failed to establish a foothold under the technical line since late January. Should they succeed this time, more chart-driven selling may be seen. A breakdown would expose support at 30,000. The current 3-day candle is set to close at 2359 UTC on Monday. So there you go. We have a little bit of bad, a little bit of good, a little bit of, you know, basically welcome to crypto. And remember the parable from the beginning of the episode so you can weather the storm. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.